Okay, so this is a basic introduction part 3 to Microsoft Office Excel 365. And this is more for if you're looking to use Excel for business purposes, like with payroll. So anyone who's doing manual payroll and they use Excel templates or wants to learn how to do manual payroll accounting using timesheets and journal entries in the Excel program. Or the client onboarding template, which is the new client checklist. I talked about that in some of my QBO classes, and I saw that some students and some people reached out. I can't find it, so I'm going to show you exactly where that is and how you could critique it for your business. Even if you don't use QBO, or even if you aren't looking to become a bookkeeper, this video would still be helpful for small business owners. So the first thing I always discuss right away is your options. I know some of you probably saw my first 2 videos, so I'm not going to go over this in detail, but just to let you know, there is a free version of Office Online. I went over it in detail in the very first video, how to access that. You need to make sure you have an Outlook or Microsoft account. And then there's always the option of Google Sheets through your Gmail. And one of the templates actually allows you to download a Google Sheet file. So the first thing, I had a few people ask me about payroll templates, and there's so many available online that are completely free. I looked through a few of them. I happen to like this one right here, the HTTPS fitsmallbusiness.com, how to do payroll in Excel. It's like a 7-step process. I'm going to bring you to the website, and they have a place where you can click and download. This is the site that allows you to download it as Google Sheets or as Excel. So if you're using Google Sheets, you don't have access to Microsoft at all, then look, hey, they let you download it with Google Sheets. And I'm going to show you that. I see they also promote Gusto. I'm going to show you that template in just a second. You will want to edit it and change it for your needs, obviously. We're going to take a quick look at the payroll process first before we look at the template, because I'm not sure where your knowledge is at when it comes to the payroll process. So I'm going to take about 10 minutes to explain the details that are involved in payroll. If you are already fully aware of this process, then skip 10 minutes ahead, and then I'm going to go over that template I just showed you. So here's a little PowerPoint that I do with my students on payroll. Oops, I didn't realize I wasn't at the top, sorry. All right, so the payroll process. First of all, it must be accurate. Any mistake with the payroll affects both the employee and the company. Large errors can lead to fines. Fines can lead to write-ups or dismissals if you or the employee that actually took part in making that mistake. They must be on time. Your checks to your employees obviously must be on time, as well as the government should be receiving their taxes on time, or you can have a fine or issues with the law. You must obey the law. So federal, state, and local laws governing payroll are specific. You need to make sure you're applying them correctly with employees and getting your payments out. You must keep data confidential. Sharing personal information can lead to a lawsuit. I used to teach a labor relations course, and one of the cases we went over was a payroll clerk that didn't realize they were doing something illegal and what charges were actually brought against them. So that's why I say, if you're going to get into payroll, make sure you understand, you know, your responsibilities in keeping that information confidential. All right, payroll terms. So you have 2 different types of employees. You have hourly employees and you have salaried employees. We're going to look at both of them in our worksheet. Then you also have several different pay periods. You have daily, weekly, bi-weekly, semi-monthly, monthly, quarterly, and believe it or not, even annually. The template that I chose from all the free ones is going to be a weekly one, but you could always adjust it accordingly. And you can actually use different payroll periods for different groups. So your hourly maybe can get paid weekly, while your salary get paid bi-monthly. Regular wages for an employee in a pay period would be 40 hours by law. Anything after 40 hours would have to be time and a half. So that's usually state and federal. Keep that. Of course, there's some jobs out there. I was a school teacher for many years for the Board of Ed, and for them it was over 35 hours. So there's some jobs out there that it isn't over 40 hours. They comply to some other, as long as it does, you can't go above 40. So by law, you have to pay at least 1.5 times the regular rate over 40 hours on one work week. But some jobs might offer better benefits and give it to you at less hours. 32 and 35 are usually the common ones. So here's an example of a biweekly pay period. So in week 1, let's say, and it's ending on this date, this person worked 44 hours. So 40 hours were regular hours and 4 were overtime. And then the next week they worked 38 and they didn't get any overtime. I say this because, sometimes biweekly, somebody might question, well, what if altogether for the 2 weeks I worked 82 hours? Well, yeah, you worked 82 hours, but for this one work period, they have to give you 4 hours of overtime because within that 7-day period, you worked 4 hours overtime. And then just quickly, most of you probably know this because I know I did it as a teenager, the very first paycheck I used to calculate before I even got it. So you should know how to do this. You would take your regular rate and multiply it by this person makes $11.40. And then the additional 4 hours overtime, you would multiply it at time and a half, which is $17.10, and that's how you'd calculate the $957.60 gross earning. So gross earning, we use the term gross earning, that means wages before deductions. So withholding, there are several different taxes that are taken out of employees' gross pay. When somebody's hired, they fill out a form called W-4, and then that's where they figure out or determine the amount of taxes that need to be withheld from that employee's tax for FIT, which is federal income tax withholding. And then the things they take into consideration are marital status, number of allowances claimed, and the pay period length. So this is what it looks like. Nowadays, a lot of companies do it electronically, but we still have some old school. A lot of my small businesses are old school, and they go to the IRS website, download it, and print it out, and give it to an employee to manually fill out. But as soon as somebody's hired, they need to fill this out immediately before they get paid because you need to know what their FIT is. And again, what's considered when you're calculating FIT, federal income tax withholding, marital status, number of claimed allowances, their gross pay, and the pay period length. And gross pay because, the higher you make, the higher tax bracket you're in. Right? And there are 2 ways to calculate this. They have the wage bracket tables, which are still available in the IRS website, or using a percentage formula, which I'm pretty sure there's calculators out there if you need to. This is an example of the bracket table. This is from years ago, but I just wrote here the numbers changed, but the table setup doesn't. So I don't even know if you can read this because it's so small, but it's just it's telling you what is the employee's pay within a weekly period. This is biweekly. So what is their pay amount biweekly? And then you would just scroll across and look at how many allowances they are claiming when they filled out the W-2. So again, the 3 things we were looking at, the pay period, which is biweekly. So this is a biweekly thing. I'm gonna see if I can make this bigger for you to guys see. It probably wouldn't even be noticeable. So you would come over here and say, oh, okay, this person made about this much, and you'd go over to how many allowances they are, and then that exact number would tell you how much their taxes should come out to be for that week. It's kind of old school. We don't really necessarily do that anymore. I'm sure they have a lot of information online for you to be able to calculate the most accurate amount. And then there's SIT, state income tax withholding. In most states are just a flat amount. I always use Pennsylvania as an example because most of my clients come out of Pennsylvania, so I will show you that when we get to the time template. But there's some states that do not charge income tax, and as of the last time I taught this class in 2020, it was Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming. And then the other 2 are New Hampshire and Tennessee. I actually got my master's from the University of Memphis, so shout out to Tennessee. They only impose it on interest and dividends, that they do not take it out of your paycheck. So you obviously will go to look at what your state amount is and any regulations. So if you're in one of these states, you're not going to be taking out SIT from your employees' paychecks. Other income tax, you could have a local municipalities. So where I'm at in Pennsylvania, we have Lehigh County and Northampton County. Most of my students live there. That's why I use that as an example, and I have the students look it up and see what percentage they have to get for their local municipality tax. And sometimes it could be a fixed dollar amount, or sometimes it could be a small percentage. Again, you would need to do the homework and see what you need to take out of your employee for your local area. The next one is Social Security tax. We have two of those, OASDI and HI. So Social Security tax started in 1935. They had a federal law that said, you know what, we need the common worker to start to contribute to the elderly and their benefits. And it actually became effective in 1937. So it was supposed to start at 62 and medical benefits at 65. But we know, I'm sure as you know, now they're trying to raise it. I've even heard up to 72. I don't know if that's ever going to happen, but they're trying to raise it, that you start to collect later because people are living longer. So let's look at these two taxes. OASDI. So right now it's 6.2%. When Obama was in presidency and he did the Affordable Care Act, he, for 2 years, I believe it was, brought it down to 4.2%. And then you never know, in the future it might change. So I'll show you how I did it on the Excel, because if it changes, you just have to simply change the first one and they will all follow. And then there's always a cap. So there's a cap for OSDI for every year. I'm pretty sure now we're at like 147. The last time my example here is in 2017. The cap was 127,200, meaning once an employee has made that much money and has contributed 6.2% of that amount, whatever it is that they in that paycheck, once they hit 127,200, they no longer have to pay that 6.2% of OASDI. But Medicare, there's absolutely no cap. But for Social Security disability, there is. OASDI is old age survivor disability insurance. That's what that is. And so there is a cap. And I don't know what the cap is offhand here, but I want to say something like 148, somewhere around there. 2022. I'm not going to look it up. And just so you know, the employer also has to contribute half. So the employer gives 6.2% and the employee contributes 6.2%. So altogether, that's 12.4%. If you are your own company and you are giving yourself a paycheck, that means you would have to contribute 12.4% because you're both the employer and the employee. And then same thing with Medicare. The employer contributes 1.45 and the employee contributes 1.45. So if you're self-employed, you have to contribute 2.9%. and pay both. All right, so here's an example. Remember earlier we showed that person that made $11 and change and they worked for 2 weeks and we said they had, let me see if I can make this a little bigger, $957.60. Okay, so we went to that wage bracket table, which you couldn't see. I wish you could have. You would have seen that when I scrolled over to the allowances, they had a liability of $89 in FIT. Then the state income tax, you would multiply this number by whatever the percentage is for that state. OASDI would be 6.2%. So we'd multiply this amount by 6.2%. And remember we said Medicare was 1.45%. So again, multiply this by 1.45%. And by the way, if you don't have percentage on your calculator, you just move your decimal 2 places to the left. So 1.45% is 0.0145. So if you want to do this in your calculator and follow along and figure out how we came up with these deduction amounts, you certainly could do that. And then medical insurance usually is a flat amount, a flat fee. So every 2 weeks, this employee contributes $33 to medical insurance. And so their total deductions come out to $271.87. And you're going to subtract that from their gross pay to get their net pay. So this is what their check would actually be, $685.73. Now, if you're a small business, you're just about to hire an employee, you're looking into payroll, you have to understand each one of these. Now, FIT, OASDI, and Medicare goes to the federal treasury. So this payment goes all in one. But then you have to find out what your Department of Revenue address is and information for your state. And if there's any local municipality, this example doesn't have one, you need to find out where you're sending that to as well. And then you would know what medical insurance company you have and send their payments accordingly. So in some circumstances, you might be paying monthly, you might be paying quarterly, semi-annually. It all depends on what you have set up with each one of these agencies. So you would have to do a journal entry, and in your first journal entry, you would make it a liability because your employee immediately is taking this money out, but you're not going to send the $89 right in. And not only, don't forget, when it comes to OSDI, you have to match that. So the employee paid $59.37 for Social Security, but you as well as the employer, as the company that employed them, has to pay, they have to match this. So they're matching these two numbers. So these two numbers would actually be times 2, and that would be the liability. You've already taken some from your employee's check, and you would hold it until you make the actual payment. And so it would be a liability until that payment is applied. Payroll Register. So the two primary records to keep track of payroll information for a company is a worksheet, and that's what we're going to look at in a second. That's known as a Payroll Register. It shows all information related to an entire pay period. And they can look different, and there's several of them to choose from. I just chose one that I thought was pretty decent. But there's hundreds of them out there. So all you have to do is Google Payroll Register Excel file free, and you'll see so many websites. Now, obviously, the one I'm going to use, I believe they make their money because they're promoting a specific accounting software program. So it's probably how they, why, well, you know, because some people say, I would never download those. They probably have a virus. A lot of them have a sole purpose in giving out free templates because they're also advertising on their page. But obviously, if something looks really shisty, then don't download it. But I can guarantee you the one I used is good. I have given it to clients and students that have asked for it. So I know this particular one is safe and it doesn't have any viruses. And then you have the employee earnings record. And that's when you're looking at each individual employee's payment history, because at the end of the year, you have to send them a W-2. Okay, so you would need to keep track of each specific employee and how much you have taken out in deductions, because that information will be sent to them in their W-2. And then here's an example of what a payroll register would look like. Let's see if I can make this bigger for you. So we have the employee's name, their allowances, and their marital status. So this says M1, so they're married with 1 allowance. And they have their earning here, year-to-date earning, their salary for that biweekly paycheck. And then they have hourly rate amount, any overtime. And then here in the second part of it is where you see FUTA and SUTA. Those are the unemployment. I think I'll talk about that next. FIT, which is federal, SIT, which is state, and then the FICA is the OASDI, the disability, and the HI Medicare, and then any medical insurance. So you would take this gross pay and you would subtract all of these deductions to then get your net pay. So this would be the check, and then over here they have the check number, and then they divide it between whether they are a scheduled employee or an administrator. So let me bring this down. Okay. A summary of an employee's earning, withholding tax, net pay, and cumulative earnings during each calendar year would be called their employee earning record. And here, like I said, is where you would get this information. I know there's still some people that are old school and manually fill out W-2s and manually fill out 1099s. I've had a lot of clients of small businesses that I've worked for as an independent contractor. They make me fill out a W-9 and then they send me a 1099, and they still manually, they print it out from the website, the IRS website, and they manually write it out. So nothing embarrassing with that. It's just as long as you have a good record of things. And like I said, this is a good example of being able to organize with it, having a good Excel spreadsheet. So Social Security taxes, that was what you saw there, the FUTA and SUTA. This is the federal unemployment tax, and this is the state unemployment tax. And it also was created in 1935. And it was set up for people that, you know, get fired or maybe laid off, fired for no reason, let me say that, or laid off, or, you know, maybe hurt themselves at their job, their disability ran out. Unemployment taxes is a way for someone to still collect a portion of their check while they're recovering or while they're looking for another job. We all should know what that is. And so it usually comes out to 6.2%. And really the FUTA is just administrative. That's the federal. They're just implementing laws and staying on top of the laws of things. But it's really on a state level, not a federal level. So the state usually gets the majority of it. So over here, this example shows that, and it's different for every state. So let me say that. You'd have to look into the unemployment percentages and the wage base limit for your state. Okay, so this definitely is not a guaranteed thing. You must do your own homework for this. But in this example, this employer has to charge 6.2%, where 0.8% goes to the federal and the rest goes to the state. And it's based on a limit of 7,000. So once the employee hits 7,000, there's no more of a need for the employer to contribute the FUTA or SUTA. Now, some states also require the employee to contribute a certain amount to unemployment. There's not many. I don't know how many offhand, but I would say maybe 6 or 7. I don't know. But there's not many. And it just so happens Pennsylvania is one of them. I don't live there anymore, but I work there. So yes, you do have to contribute in some states, and I'm in one. So the wage-based limit for states usually could go all the way up to 41,300. It depends on what state. It really depends on the industries in that state. Is a high turnover rate. So when I taught this class, I guess 2017, oh no, actually it was 2020. I just noted that in 2017 it was 0.07% for Pennsylvania. But in 2020, when I taught the class last, it was 0.06%. So, and it still is. It still is 0.06%. But that's something that you want to make sure you're looking at a credible site to get your information on. And then you also have something like bonuses and vacation. And there's different ways to do journal entries for those without having to put them through QuickBooks and just, doing it. And I'll show you the journal that I made for our template. And you would just put it in there as, bonus expense and bonus payable. So you're acknowledging the expense and you're acknowledging that you owe this X amount of employees, this amount of bonuses. Maybe you don't give it until Christmas time at the end of the year or whatever it may be. And then there's worker compensation insurance. That's something also, if you're going to get into payroll and hiring employees, you need to look into that. Because especially if it's a job where they're working machinery or they're driving, something that they could be hurt while working, you need to look into workers' compensation insurance. All right, so let's look at how to journalize the payroll register. You can manually type this into your journal. So this is an example of it. And this was just like the payroll register we had right there. And so what happens is this debit right here, I'm acknowledging the payroll expense, what it costs me as the employer to have employees. So I would take these two numbers added together and it should add up to this. So my FIT payable and my FICA, OASDI, and Medicare, these all go to the same agency, okay? And I took that from the employee. So this represents what I took from the employees. So remember, I said the employee contributes 6.2% to OASDI and 1.45% to Medicare. You later have to also pay the same amount. And we'll look at that in a second. And then the state income tax and the employer doesn't pay any, but you do take them from the employee and you send them out to the appropriate agencies. Over here at the bottom, it says wages and salaries payable. Those are the actual checks. This is the total amount of the actual checks that the employees get. So this is how much was earned, but then you have all these agencies you have to send the monies to, and then you have the checks that you have to write your employees. Hopefully this makes sense. I don't know if anybody has taken accounting classes, but if this doesn't make sense, you definitely want to do your homework and understand what a payroll register journal entry actually represents. The next one's going to show the employer's responsibility, because remember I said the employer has to match the OASDI and the HI. So what happens here is you have your payroll tax expense, and you acknowledge that expense that the company has to pay. And then this is the total amount that has to be sent to the Treasury Department. And so we have the FICA, which is 6.2%, and the Medicare, which is 181.64. I'm sorry, the other two are not. They're actually unemployment. So you have the FUTA and the SUTA. Okay, and this is to record the payroll taxes for that 1 week for your responsibility as the employer, because you have to match that. And there's other circumstances where you also might have to pay some of the medical or maybe there's an employee stock option or 401k where you also contribute to it. So those are other examples, but we don't have that because it's a little bit more intense in this particular example. So that ends payroll. It was very, very basic, but I just wanted to make sure you had some idea of these terms that we're going to be looking at now. So I gave you this website here, right? This fitsmallbusiness.com, how to do payroll in Excel. And I showed you the website on where you can download the actual employee data sheet, the worksheet that they have. And this is an example of that. So I just wanted to look it over with you. So here we have, let me scroll up to the top, and enter employee information pay period. I loved it because I didn't even know it until I looked it up. The very first pay period of this year, 2022, was if you work, Friday to Saturday, it was 1/1/22 to 1/7/22, which is great because that means, if you know accounting, there was no accrued wages from the year before. If you have that work week. I don't know, some people might not have that work week. It all depends on when you get paid and when your work week starts. So I have all these employees that are listed there from this template. Obviously, you would put the real information. I know some people like to put in the next column social security numbers, but now that we've gotten into so much, data breach and, protecting confidentiality of your employees, you might not want to. So you might just have that in your own personal records and not add it here to this particular paper, which could maybe land into the wrong hands. So I put formulas in here. They're not in the actual template, but I put formulas in here. So I just went ahead and said it's a company like my company, because the company I work for literally tells their employees, you are not going to ever get overtime. So the minute you hit 40 hours, they make you clock out and you go. So if you ever work a day a little late, you're thinking to yourself, yeah, I'm getting out early on Friday, because you'll never get overtime. So if it's a company like that, that's why I left out overtime. There's no overtime in this. You would just simply say, okay, this equals 40, because it's 40 hours times before. That would be the rate. So that was the formula I put here. And then for the formula for the salaried employees, because this is weekly and there's 52 weeks, usually they do that. Some of them might do 50 if they give you the 2 weeks off vacation. That's a different procedure. I always tell people it's just easier to just go divide it by 52 and then claim the benefits in another way. All right, so we're going to take the annual salary and divide it by 52 weeks. And so their weekly paycheck is $2,884.62. Now, mind you, this is the gross pay. And I just wanted to show you, if you look, these are the formulas that I used. I just simply times 40 to the hours, or I took the salary and I divided it by 52. Now, federal income tax rate is 5.2. They just, for simplistic reasons, put that for everyone. Obviously, if you look at these pay, there's no way everybody has 5.2, but that's what they use for the template. That's something, like I said, you would have to do your homework. Either you could go to the IRS website and look for the wage bracket tables, or if they make their income is too high, you actually have to input it into a formula. Back when I went to school decades ago, we used to just calculate them in class. I'm sure now the IRS probably, or as well as other accounting firm sites, have a calculator there for you. You just input it in and it'll tell you what the weekly FIT is. So this would be different for everybody, okay? It's be very rare that all your employee has the same percentage. Now, state, however, would have the same. And I wanted to show you my tax for Pennsylvania. I don't live there, but I work there. So 3.07% is the flat rate that they charge everyone. So I wanted to come in here and show you the template one, because I'm going to come in here, and when you click here, this is actually where you type the number, okay? You see in this window. And I'm going to put 3.07. And when I push enter, look what happens. You know why that happens is because the person who made this template automatically had it go round to the nearest tenth. However, remember the first thing I said when I presented my payroll process, you need to be as accurate as possible. So you don't want to take more money out of an employee's paycheck than needed. So you want to make sure that it's as accurate as possible. So what you would do is you can either come here and do it, or I'm going to show it to you this way. I can come here and do it, or I can come here and I can go to the number format. It'll bring me up automatically to percentage, and I can come over here and choose 2 and push OK. And then now it has it at 3.07. Now what I would do after that is, because this is something that everyone's going to pay, I would just drag it down. Or I would say equals $, F, $4, enter. It's still going to be 3.07. But the reason why I want to do that is because let's say next year it changes, and I'm going to drag this down. Oops. I didn't mean to do this one. And remember what I did, I talked to you about in the one, I think it's the second one, that when you put those $signs, that gives you absolute values. So that means that I'm only going to be using F4. These $signs are locking in whatever value is here. So on your very first employee, you'll have to change that percentage, but it'll go accordingly to all of the rest of them. And let's say you had 100 employees, this would be easier. Obviously, if you had 100, you're probably outsourcing using ADP or Paychex. But if you're doing it yourself still, all you would have to do is come to this first one and change the percentage. So if Pennsylvania changes to 3.09 or 3.08 next year, you just have to change this and they'll all change accordingly. Again, we said Social Security rate is 6.2%, but there is a cap on that. So that'd be something you have to be cognizant about while you're calculating if you're doing it manually. Once you hit that amount, you have to stop taking it out of the employee. And you also, as the employer, no longer have to pay the 6.2% once they reach that amount. The only person who is going to do that is this guy here, John Doe number 2. Because I'm pretty sure the cap right now is like at 148. So that means his very last paycheck, he probably is going to have just a little bit of OASDI to pay. Medicare, there's no cap and it's 1.45. Now, I added in a column that you wouldn't see on the download that you put in. I added this column in because employee FUTA tax could be implied if you are, I'm sorry, it would actually be SUTA. SUTA tax would be applied for Pennsylvania. So I came over here. And I can't stress enough, I tell my students all the time, make sure it's .gov, because if it's one of these .coms, they could be wrong. They might not have updated their information. So .gov will give you the latest. See, this is calendar 2022. You could go back to previous years, obviously, maybe if you're getting audited. But as of right now, it's 0.06% for per 1,000. And as I was saying, 2017, it was 0.07, so it came down just a little. So I went ahead and put 0.06%. And then 401 contribution, this employee likes to give a flat amount of $25. And nobody used any paid time off. As I said, there's different ways to do that. So I just wanted to show you, in the first 2 videos, I gave you ideas of how to do formulas. So I'm going to go ahead and write a long one out. I know the template that they have there uses, I think, if formula, but I'm just going to use this one just so I could really show you what's going on here. You definitely don't have to use this if you don't want to, but I'm going to do it this way. We know what the gross pay is for John Doe number 1. It's $1,000, right? So here we're starting off with $1,000. He made $1,000, and now we're going to subtract his deduction. So I'm going to go minus. Now, note, I'm here. So I'm going to stay in here. I'm going to go, I have to put in parentheses because we're going to use the order of operation. Now I'm going to take this and multiply it by this because he owes 5.2% to the federal government. And I'm going to end parenthesis on that. And I'm going to go minus parenthesis. I'm going to take his gross pay again. And I'm going to times it. Did that register? And I'm going to times it by the state. Now that goes to the Department of Revenue for Pennsylvania. I'm going to subtract again his gross pay times Social Security. Oopsie, I didn't put my parentheses, but look how easy it is to just go back and change that. So that was G4. Let me just make sure I'm in the right place. Yes, that was G4. Okay, so now the next one is, can I click on it? No. I think I messed up. Sorry. Let me go back to the formula. These things happen in real life, so just follow along with me. So I got up to G4, and I believe that is, yeah, Social Security, G4. So now I'm going to say minus parenthesis, his $1,000 times H, okay, parenthesis, minus his gross pay, oops, gotta put the parentheses there, times the employee's FUTA, because he's in Pennsylvania, parentheses, minus, and then he has a flat rate of $25. But I'm just going to choose this because obviously this could be a formula I could drag down to all the other employees, and they might have a different 401k contribution. So instead of putting $25, I'm going to, you always want to try to keep it, because you want to drag the formula down. You want to keep it where you're not putting numbers into your formula and you're selecting the boxes, if you were wondering why I was doing that. Now I'm going to push enter, and that employee would get $815.20 as net pay. So his check would be $815.20 and his gross pay was $1,000. Now obviously somewhere else you would be recording the total amounts, and then, you know, if you're a very small company, this could be something you're writing out, or it could be something that you want to type up in an Excel file or a Word file where you're showing them their deductions on a weekly basis. Okay, so just wanted to show you that. And then what would happen is, okay, so this is first week, and once I've completed this, I would just copy and paste and bring down. That's what I did here. I just copied and pasted and brought down the next one, and I said, well, this is the next week, 1/8 to 1/14, and then you would just keep copying and pasting every one. Let's look at the next one. So employer payroll taxes. So remember, we were saying that the employer has to pay FUTA, SUTA, Social Security, and Medicare. And so you would have these calculations here, okay? And they have here that this is coming out of whatever I put in for January. Okay, because you're going to do it January, February, March, April. So when you put that into your, here's the general payroll. You see, they have it just as the amounts placed here based on what we put in from the first one. And they have all the formulas there. They're all there for you in the template, and it's all calculated. So all of this goes in. And the other one, that's the one I wanted to show you. Remember, I showed you the journal entries for payroll. And if you, you have to make sure the file is only just this one. So you'd have to bring this one word worksheet out and just have this one thing. But you can import your journal entry into your QBO. So let's say you don't outsource and do ADP or Paychex, and you don't have them linked, or if you do ADP or Paychex and you don't have them linked to your QBO, they'll send you a journal entry sheet, an Excel file that you can import into QBO. So this is where you would do that one where you were showing, you know, your liabilities and where they go to the different agencies, and then obviously you'd come down and have the paychecks. And all of that should add up to the numbers that you're showing in your payroll. So again, this is the website I got it from. I think it's a great template. I looked at a few of them. I happen to really like the way they have all the formulas set up there for you. I just did a few changes myself and adding. If you see here, they have number of payments. I ended up changing that. And then they didn't have an employee SUTA, but I'm from Pennsylvania, so that is possible. And I did change a few of their formulas. So that's just an example. If you're interested in Excel, you don't have to create it from scratch. There's so many companies out there that have websites that, you know, have templates for you to download and will make it so much easier. Have the formulas in there and everything. You could critique it for yourself. Next thing I wanted to just quickly mention to you is if you do have independent contractors, which I am, I'm a pro advisor for QuickBooks, so I go in and a company will call me and say, okay, I want to switch over to QBO, and I come in and I train their employees. Whatever we agree upon, they give me a check at the end of the year, they send me a 1099. So before you even get started with that independent contractor, you have to give them a W-9, and you can find that at www.irs.gov/form W-9. And then if you have employees that you're hiring, the first thing you have to do before you start paying them is have them fill out a W-2. Why? Because that was back when I was explaining in the PowerPoint. FIT is determined on certain things, your marital status, your amount of allowances, and how much you're making. So you would get this form from www.irs.gov/form W-4. A lot of companies now electronically send it, but you could go to IRS, print it out, and have them manually fill it out. And then at the end of the year, once you've closed your books, you must send a final statement. For an employee, that'd be a W-2, and for a contractor, that'd be 1099. And they need to receive that by 1/31. Okay, and you can also get those forms from the IRS. All right, so if you're just getting started and you're just hiring employees, make sure you do your homework on all of your responsibilities. You do not have to outsource. You do not have to pay extra crazy money for a payroll company when if you have the time on your hands, you can definitely learn how to do this yourself. The last thing I want to explore the last thing I also wanted to mention with this right here, I'm glad I looked at this, viewing and editing. When you first download the payroll, this right here, when you first download it, it'll come over here, it'll say viewing. It'll say viewing. And so you'll want to come down here and go to editing so that you can change it. I guess they do that to just make sure, you know, before you do any editing, you look over it completely, look over the template completely. But you're going to want to critique it to your own business needs. The last thing I want to talk about with this particular video is the new client checklist. That's something that we use in QBO. It's a standard form that we use. You sit down with a potential customer, okay, and you go down each question, and it's set up to find the best option or plan available for your potential customer to choose from as far as subscription levels or payroll options. Now you can use this for QBO or not QBO, but Intuit is the one that developed this. The file is found in the training section of the QBOA Pro Advisors tab. You should edit, as I said with the other one, you should edit it to suit the needs of your business. And I'll show you how I edited it a little. Not really, you don't get to see my whole thing, but I'll show you a little of what I did to it. Now, first I wanted to make sure that you understand, because I did a video on it. I explained what it was, and I saw a lot of comments were like, where is it? I can't find it. So let me make sure you can find it. So when you go to your QBOA, now, if you haven't watched my QBO videos, what is QBOA? QBOA is QuickBooks Online Accountant. It's a free, see QBO, Accountant. This is a free bookkeeping subscription, all right? So if you have a Plus account or something, that you're not going to have access to this. You would need to get that from your accountant, and they could send it to you. So let me explain. If you got to give instruction to your accountant. How do I do this? You go to the Pro Advisor tab, and then you go to Training. So I'm going to go to Pro Advisor, and in the Training, I'm going to scroll down to the 8 modules. Now, if you haven't even done this, the 8 modules will probably come up in the very first section, because that's usually the first thing you're going to study is for the Pro Advisor exam. So it would probably be here, but for me, it's not, because I've already completed it. So I'd have to scroll down here and look for it. And here it is. So it's the QBO Online 8 module, 8 hour, 7 CPE credit training. This is the training that you take to take your Pro Advisor exam. Okay, so I'm going to click Revisit, and I'm going to go to the section that says Onboarding, because this is what onboarding is. Onboarding is when you're bringing on a new client. And so Intuit, under this section, now you see Client Onboarding. Scroll down, it's the second one. So the first one is QuickBooks Online Solutions. The second one is Client Onboarding. So I've completed it, so you don't see the drop down. I'm going to click on this, and in the very first section, which is Onboarding Workflow, sorry, my internet is a little slow. You're going to scroll down a little, and you'll see Company Resources, and you'll see the checklist Excel file, and we're going to look at that in a second. But let me just wait, but this is taking a minute to go. Okay, here we go. So here I'm on the Onboarding Workflow. And if you scroll down on onboarding tasks right here, scroll down just a little, here's the new client checklist. And when you click it, it's an Excel file. You would have to download it to your computer. I already have it, so I'm not going to take it because I already have it. And I have it right here for you to look at. I've changed mine, so. All right. So this is, I'm going to go quickly over this because I've already did this with my QBO watchers. This, for people who are just looking for Excel, what this is it has several questions. So the first one is the client profile. And this is where you can ask your client several questions. Now, if you don't have a business like I do, you can critique this to however you want it to. And in my last video, I showed you how to do the drop-down list. So you can have several different type of questions or answers, you know, yes, no, maybe, you know, other, and explain over here. So here, where I'm just getting the company name, their contact information, their website, their FEIN or social security number for a small business. And then after that, I go to needs assessment. And if you're looking at, okay, how much am I going to charge this client? This obviously is based on their needs and how much work they're expecting from you. So you're going to go down like, do you do estimates? Do you need invoices? So if invoices, that means you are going to be applying accounts receivable. You're going to be helping them and sending bills and contacting clients possibly to, depending on what type of job you're setting up for yourself. I don't actually do bookkeeping, but I'm going to still walk you through this. Do you need sales receipts? Do you need financial statements on a monthly basis, quarterly basis, and so on? Is sales tax applicable to what you're selling? Do you have multi-currencies? That's very important. Do you sell internationally? Expenses and accounts payable. You're going to look at how many credit cards do they have? How many loan payments do they need to make? Do they have several cash accounts? Do they need to track 1099 reporting? So you have all these questions, and then you go to the drop down and you select. It's either yes or no. And then you, based upon all those yeses and nos, you go to the next one. And for QBO, again, you could critique this to your own. You go to each one that you asked, and the first thing they say is number of users. That's really important, because if you have at least 3 users, you can't use self-employed or simple start. You would automatically need essentials. If you needed up to at least 5 users, you would need plus. And you would go down and you'd answer all of this, and it kind of would give you an idea of what subscription level. I would say for me, the way I use this, I do use this for my clients to give them an idea of what they need to, subscription level they need. I don't do bookkeeping though. I help them bring their information in, whether they were doing manual bookkeeping with Excel files or they were coming in from a different software application. I help them bring it all in, and I give them an idea of what would be the best. We could always change it later, because upgrading and downgrading is very easy. The other thing you would want to look at is mileage and cars and assets. So you could put that. And then the last one they have here is certain questions, or certain, like a list, like a checklist for yourself on what you want to do. So obviously the first thing is to meet with the client and sign the contract after your initial meeting. Then you want to gather any other client data or documents that you'll need to get started. Creating their new online subscription that they agreed to. I'm sure within the contract they're going to sign, yes, I agreed to this. And then you'll tell them what the pricing is, and you can get discounts if you're a pro advisor. And then this last one right here is self-employed, and it asks more simplistic questions because this person is someone who has the lowest of all levels. And the last one here is mine. NBI is Nicole, the business instructor. And here I developed a couple of questions because I do training. So based on this is what I decide which package they probably would be the best for them. So I asked them, how many employees do you need to train? Is the training the same for each employee? If not, how so? Because they might have 8 employees and half of them work in the office and will be dealing with banking and payroll, and the other half might be out in the sales team, and I just need to be talking to them about customers, products and services, and so on. What will be available hours for training? So what days, how many days a week? What time frame were you hoping to complete the training by? I need this to be realistic. If they're like, I want this done in a month, and I see the amount, there's just no way I can get it done in a month. But if you're willing to work with me in 2 months, I can sufficiently get you, your desired results. Where would training take place? And if they have a couple of offices, I would discuss if mileage fees would be necessary. I mean, I do offer video chat, but I don't encourage it because most people need it in person. Will all employees who are receiving training have access to a laptop during training? I actually asked this now, and this is, as a business, you tend to ask questions as you go along. I once had a client, and then they had me in an office, and everyone was just staring at me. And I was like, do you have a projector? Because I had to show my computer. I literally had my laptop in the middle of the table, and they were all just surrounded looking at my laptop. And then I realized I need to ask this next time. Are they going to have they worked at all different parts of the building, so they couldn't physically bring their desktop computers with them, and nobody had laptops. So then I realized, okay, I need to buy a couple of laptops, and if I need to provide them, there's going to be a laptop fee. And the last one is, after my QBO setup and training is complete, what follow-up services would you like? Because once I fulfill my contract, if you need to call me on a regular basis, if you do not want if you don't want to pay for the follow-up package, then anytime you call me or need me to come in, I'm going to charge you accordingly. And I usually charge by the hour. So these are the type of questions I have. I didn't really want to show exactly what I have set up because I don't want to share all my secrets. But this is something that you can add as many, because you just come over here and you add a new one, and then you would right click and then you would rename it, and then you would put it however you would want. I'm gonna delete that. So this is a great template for anybody, even if you're not a QBO advisor. This is a great template for anybody to use in Excel. Excel has so much to offer in business. So that concludes my basic presentation. I just showed you some payroll. Like I said, a great amount of opportunities out there for you to get free. There's some that I see, they charge $15, $20 that were pretty intense as well, really good. But why, when you could just take a basic one and critique it yourself? If there's any questions or anything you'd like me to teach beyond this, just let me know in the comment section and I'll add another video. The next one I'm going to do is PowerPoint, then I'm going to do Word, and then I'm going to get back into my QBO videos. But if there is something you'd like me to see, and like a question that arose when you were watching this, let me know. And just as a last comment, if you don't have a QBO account and you don't know how to get to the new client checklist, you've tried Googling it, because I know some websites have it and you really can't, then just shoot me a comment in the and then give me your email and I will email it to you, because I definitely have the basic one to send you. Okay? All right. Thank you for watching.